The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at the trade action from Thursday, a little bit of red on the screen in grains and in livestock. Soybean oil, the lone exception, following the crude oil market to the upside, seemingly maybe putting in a little bit of Middle East war premium there in crude oil that helps support bean oil on the day. A lot of factors going on. Let's talk about it. Joining us now for market analysis, Brian Doherty with Total Farm Marketing. Brian, good to talk with you again this week. Hope you're doing well.
Yeah, good to talk to you. And to your point, right on the screen today, we've had some really good sort of elevated row crops. And today, not only row crops, but the livestock was off a little bit. Maybe some profit taking. You got the weekend coming up, maybe some hedge pressure, maybe a little bit of change in the forecast, maybe all of the above. And to your point, the real strength in the energy complex. So as I'm talking to you, I'm also trying to search to see if there's any new latest headlines with crude oil up, closing in on $4 higher per barrel today. That's a pretty good jump, and that's Middle East tension. I think we've talked about this for weeks on end, that it just seems like that is a very dangerous part of the world. It's a powder keg, and we're seeing activity. I mean, we're getting numb to the idea that Iran, for the second time, throws, tens and tens and tens of missiles. They luckily get intercepted, but there's wars on a lot of fronts right now, and we're watching this, but our prayers, our agony, all of this goes out to our feelings about how this. So the markets are reflective in that as well, Jesse.
Yeah, and it's been an interesting thing to watch. You mentioned maybe just some broad profit taking, but those Middle East tensions, I think that's a factor that not only in the crude oil market, but might play into some of the grains as well, especially that wheat market. I think about the global wheat picture and how global the wheat markets are. You throw in the dry weather concerns in Russia, some drought emergencies there
There
announced
you
this
go.
week, talk of
Yep.
export quotas. Egypt sounds like they might be a little cash strapped. They're looking at maybe mixing corn or sorghum with wheat flour potentially here. I saw that headline on Thursday. So, you think about wheat's had some rallies here the last couple of days, but settling back on some profit taking. But it feels like a lot of these factors might influence the wheat market, which could in turn maybe influence the row crops, Brian.
Well, wheat traditionally has sort of a, let's say, a reputation as being the leader. When wheat runs up, the markets follow. When it falls down, markets follow. Wheat is produced in every major country in the world. It's produced 12 months out of the year. So it is a very dynamic in the market, a very, the largest food staple in the world. So the market pays attention. Now, we saw some big purchases from Egypt or not against, for Russian wheat. So obviously an appetite to secure inventory, but maybe also preemptive strike that, look, this dry weather in the Black Sea region has a bite, and it's for real. And when you've got countries within Russia declaring emergencies, that is a pretty big deal. And so that needs to be, just recognized. It's something that the trend of wheat production may be edging lower rather than higher in that part of the world. And I've said this for a while, but when you take into account inflation, if you look at where corn prices are, bean prices, wheat prices, they're still on the lower scale of prices from where they could have been and where they have been, or where they could be and where they have been. So that's something that it won't take long for the world to wake up really quickly. Energy is a big component, a lot of volatility there. Dry weather in South America. Now, I look at the latest forecast that I see, and it goes out 10 days. You're talking, there's a few days in there of 106, 107 degrees in Mato Grosso. 2% chances of rain today, tomorrow, 3%, something like that. Really small numbers as the week wears on and moves into next week. High temperatures drop from the low 100s to the high temperature of 94, and then maybe 35, 45% chances of rain. But I'm still not seeing this massive blanket coverage and switch in weather pattern. The bean market seemed to reflect that today, but is it just a pause before another ramp up? Or is it kind of getting tired? Or is farmer selling picking up? Or is it all of the above? It's all of the above. Farmer selling has picked up. We've talked to farmers. It's been a good rally. They don't want to necessarily store beans. They're penciling out costs. Sorry for being so long and winded, but there's a lot of variables here.
There are a lot of variables here. And to your point there in corn and beans, I was going to follow up what you were just talking about here and thinking about some of the fresh highs here in D's corn, for instance, at 434 and a quarter, fresh high in November beans, 1069 and three quarters. I have to think that those are going to be some key overhead resistance levels as some of that farmer selling and other factors caps some of this rally, Brian.
It likely will. So in a couple of conversations, as an example, in the last 24 hours with farmers, and they're looking at, okay, what can they get for spot price corn right now if they're taking it out of the field versus how much does it cost to dump it or unload it versus interest costs versus the carry. And there's some pretty tight numbers there. So it looks attractive to go out and say, well, I've got to carry out to May, but when you start penciling interest costs, storage costs, fees, it kind of gets to be a toying cost, and it's just really a matter of what kind of risk do you want to take, and or do you want your cash flow sooner or later? And that's where a lot of times it gets to beans on farm storage. You may not have, may have a larger bin that you don't want to tie up most of that space or chunk of it with soybeans. So my hunch is you're going to see a little bit more heavier on the bean sales. Farmers are anticipating that the bean market is a couple good rains from losing 50 cents or a dollar if it looks good in South America. But there's some weather now, so I think you take advantage of the rally. And again, I'm not an all or nothing person, but I think you just keep edging sales into this. I've never ever heard a farmer tell me, "Yeah, we really went broke," taking, selling some rallies. I just never hear that. It's language I don't hear. What I hear is, "Yeah, we kind of stuck around with this inventory too long, and it really cost us this year." Um, so that's kind of my word today is, run a sharp pencil. You're in the factory. You're in the cab. You're out. Think just ask good questions.
Oh, that's a good point. And something that I thought I would ask you about too here that I think is, of course, at play in these markets is the funds. There's been maybe a bit of short covering from fund traders, but it's interesting to think about this. And I was talking with someone about this earlier this week. How the CFTC commitment to traders reports technically it's Tuesday to Tuesday is what it is, and so sometimes it feels like on Wednesdays and Thursdays in these markets, you see a little bit more of that fund activity potentially as they're kind of technically they're starting a new week, even though we don't get the CFTC reports until Friday from this past Tuesday. So I think that's maybe an interesting dynamic that doesn't get talked about enough in these grain markets.
It's a dynamic because on Friday, well, first of all, the commitment traders reports are released on Friday afternoon after the markets are closed. So there's really not new information through Tuesday for the market to work with until Sunday night or Monday. So you got even more drag there, and then more developments in weather and politics or whatever the case may be. So you've got that leg there, but even if we kind of just erase all that and step back, moving into this week, the amount of money that was net short, managed money, agricultural products was well over 700,000 at its peak, and now well under 350,000 as of last Tuesday. So really cutting that, and it's I'm talking about milk and dairy and all the egg sectors, um, cotton. So there's been a big reduction. So why is that? One part of it is, well, the market's probably all, you might argue, overdid it to the downside, and you get a big buildup of shorts. And then if there's not a lot of belief that there's good potential to stay short of the market, you start seeing people exit. And then the natural human thing is, well, maybe what am I missing that they're not? Maybe I need to be buying this, or it's getting dry, or it's this or that. So you see this ebb and flow, and that provides opportunity in the marketplace. I still step back in the big picture here, and I don't want to sound too like wildly bullish, but the world's had really good crops the last several years. Tell me where the shortfall is. I can tell you the one. It's Argentina corn, soybeans 2 years ago. You got to go back more than 2 years. And so as the world, let's call it shrinks in size with the ability to move and distribute and people get around, the need for big crops is ever more present. And so it's one of those things where it's not a problem until it's a problem. So that's where the hope for grain producers is, and that's where the reality for livestock producers or end users is that things can change dynamically here. So don't fall asleep at the switch if you're a buyer. If you're a producer, relish the good crops you've had. Understand it's big supplies are a function of good crops, but that your product is needed and will be needed in the future. If there's shortfalls, the market's going to spring right back out of this. I'm talking a macro picture, but that's how it works, and that's how it's always worked. So I'm not a believer that we have endless supplies and low prices forever.
Brian Doherty, Senior Market Advisor at Total Farm Marketing, is our guest here today on Market Talk. I want to switch over and talk livestock and dairy, Brian. And
Yeah.
I first want to ask you in terms of the protein markets and more. Obviously, we have the dock workers strike on the East Coast and Gulf Coast ports here happening as we speak. And from what I've understood, a lot of the impacts to agriculture would be containerized ag shipments, which unfortunately would include things like meat, et cetera, et cetera. Do you feel like the dock worker strike is having any adverse impacts one way or another in the protein sector this week?
Not that I can see. If you look at just the charts, what's changed? Maybe a little bit, maybe in some of dairy products or something, maybe. But really, we came into this week with this work, the strike, and we're like, well, what impact will it? It's just hard to quantify that. So I'm not afraid to say I don't know. This is it happens, and then you see there's other experts in that area. Now, if the milk market is any reflection of this, we've probably peeled off $1 in the front month futures here in the last several sessions, but it's been volatile. We've had some spikes. Let me give you an example. October milk 23.26 on the first. Today's the third, right? Today we're at 22.01 on the last trade here with a low down to 21.75. That's a pretty good range. Now, is that downturn because of the worker strike? Is it something else? Maybe milk just is a high price commodity, and we started seeing demand back away from butter with butter prices now on the defensive, and product prices that have just been really really hot and on fire, all of a sudden cooling off a little bit. Um, we're seeing that in the cheese market peaking a couple of weeks ago. So you take away the peak, and we're not a lot different today than we were 2 weeks ago on any market. So is that? I don't think it's a reflection of the dockers strike,
Mm-hmm.
uh, dock worker strike, but I don't know. So, but the key with this is be prepared. If this is something that has negative ripple effects and impact, well, one of the things that we encouraged producers and cattle, and grain, anything, just get some put spot on these rallies. If this turns out to be the tipping point to really spiral downward, you'll be grateful that you did that.
That's a good point. No, and you and I have been talking for the last several weeks how volatile the dairy market has been on its own. So, good thoughts there. And in terms of cattle and hogs, we've had a couple up days this week, and then maybe it just caught up in the general profit taking on Thursday. But the broader cattle hog complex, to your point about the charts, I haven't seen a whole lot of major changes in the last several sessions as well on the charts, Brian.
And not on the charts, but if you kind of look at like the cash market, I mean, we're not seeing anything. I mean, normally this kind of stuff starts with the cash, and it's like, oh, cash dropped $3 overnight. We're not seeing any of that. So any of that I could directly relate to. And so one of my jobs and what I do is to be knowledgeable in the markets and be sort of a filter for our customers that call in and want to know how to they can utilize risk management tools. And as being part of that filter, I'm reading a lot, listening a lot, being involved, like with your show, and I'm having a really tough time coming up with some really good bullet points that a farmer's busy. He doesn't want to hear me rattle on forever. He wants three or four reasons, within 1 minute. Hard to come up with three or four things on this strike. So, while it seems critically important, it didn't seem to me like the market. I was surprised at how many farmers called in and said, "Gosh, I'm surprised the markets aren't drowning, or falling apart." And it's just like,
Mhm.
well, to your point, I don't know how it impacts. It does seem to be a container industry problem, right? And I even saw one thing on one of these sites that said, something to the effect, um, uh, um, this only affects product coming in, really, I guess. But their point was, if it's made in America, we don't have to worry about it. So I, I'll put that no for whatever category.
Yeah.
But uh,
Yeah. No, and to your point, I'm with you. I think there's just a lot of unknowns with the dock worker situation. If it lasts for a long time, then we could see some other impacts. I think that's the biggest. I think that's the category we put it into, a kind of a wait and see type of category until we know more. Is what it feels like, Brian.
it does. What I have seen when I watch the news is it's that they're kind of whoever they is, the analysts are saying it's about, I think the last number I heard about, it's costing, I don't know if it's costing the economy, or they talk about $4 to $5 billion a day.
Yeah,
So that's a lot of money, obviously. So it's very impactful. But yeah, I don't know if that's a zero sum game from what's coming in, going out, inside, internally, just business loss, wages lost. I don't really know. It's a lot of variables there.
definitely. Well, let's close out our conversation today. Final thoughts you have? Anything you want to share or reiterate with producers here today?
I think it's almost the same, I believe, as we talked last week, that when you get a rally like this, kind of unexpected, as you're hearing really good corn yield results and some variability, prices are coming off the lows. One of the things that never ceases to amaze me is when things tip over, how fast they can tip over. So it might take 3 weeks for corn prices to go up, and you lose all that gain in 3 days. So follow your instinct. If you're thinking that you need to be a seller or you should be selling, listen to yourself. If you should be selling, then why aren't you doing what you should be doing? Right. So I would say, listen to the instinct here. It's not like we've got a real problem out there. God bless the people in the path of the Hurricane Helena there. But my goodness, we're not facing those type of events in the central Midwest. Let's say just devastating harvest or knocking crops down. We've got a good, clear weather pattern. So kind of follow that instinct, and I think that'll help guide you. A lot of times, that instinct is made up of a lot of experiences you just can't quite quantify, but it kind of knows the right thing to do.
Brian, if folks want to reach out to you for a conversation, take a look at their marketing and more, I know a few different ways to get in touch with you. How can they get a hold of you?
Well, first, we'd love to see maybe a um, phone call, and or an email. So phone call is 800-334-9779. Email is Brian with a Y at totalfarmmarketing.com. Those are probably the two best ways if you'd like to connect with me personally. If you want to take a look at our website, we got a great company website, totalfarmmarketing.com. Take a look and you can connect with me through that as well.
Brian Doherty with Total Farm Marketing. Always good to chat with you, sir. Have a great weekend. Thanks for joining us here on Market Talk today.
Thank you, Jesse. A pleasure. Keep up the good work. Appreciate you.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.